Joining us is Peter Switzer. It's quite the shift, isn't it? Founder of the Switzer Report. Pete, good morning to you. So some bankers doubt the post-bounce-back economic boom. Can you elaborate on this? Why?
Yeah, well, what they're saying is, Pete, there's going to be labour shortage problems, and like your earlier stories about vaccination or unvaccinated workers, do you allow them in the workplace? Do employers want them? Are people going to be willing to work if there's still a bit of coronavirus around? All those sorts of things. Plus, you've got these global supply chain problems. We know new cars are a problem. The chips that go into these cars, there's a chip problem out there as well. So all this is, look, I think the bankers are only going to be partially right. I think the majority of businesses and sectors will really bounce back. But you did notice last week the New South Wales government said they're going to extend business assistance all the way into February. And that's because they realise there's going to be a transitional problem. But I think as you go across 2022, the momentum's going to build really big time. I interviewed Michael Knox, the chief economist at Morgan's in Brisbane the other day, and he's a good forecaster. And he actually said he thinks there's going to be a commodity price boom in 2022, all linked to the fact that the global economy is really going to be surging. So I just think it's going to be a momentum thing. The bankers might be right short term, but there's still going to be a lot of spending once we get out of lockdown.
Okay, and the Dow Jones down 5 days in a row. Pete, is that a sign of things to come?
Well, it could be. I think there's going to be volatility over the next couple of months. I think by the time we get to November and vaccination rates are a lot higher, I think the stock market will start to really show that. But September and October are bad months anyway, Pete. You've got the Delta strain causing problems even in the US. They're surprised how much it's spreading. You've got future economic growth problems with China slowing down because of the Delta strain. You've got US jobs missed by 500,000 last week. Now, it could be just a statistical aberration. If it's not, that could really so they're going to really look for those next month's numbers. You've got the Fed and the European talking about tapering, less bond purchasing. You've got concerns around inflation, all those sorts of things. But I actually showed in my report, Pete, that the chart, when you look at the S&P 500, it's been going up at a rate of knots. And every time it falls, it only falls by a small amount. And last week, those 5-day falls on the S&P 500, it was only a 1.6% fall. So I think it's kind of overdue for a sell-off because the market's gone up about 30% this year in the US. But I don't think we're going to have a major correction. Only a pullback.
What do you make? How does this lead into the property argument, Pete? Do you suspect that these stunning price rises, particularly in our capitals, are going to continue?
I think what we're going to see when the spring selling starts and we're out of lockdown, what's going to happen is a lot more properties will come on the market.
Right.
So the demand's still strong, but the supply's terrible.
So I
interviewed Charles Tarby from Century 21 last week, and he's saying exactly the same thing. He believes a lot of sellers will not put their house on the market when they can't get people to turn up to go through them. He said, but come, say, December and rolling into next year, as lockdown makes it possible for real estate to become normal, supply will help contain these massive price rises.
Right, so for sellers now who are just getting massive numbers for their homes, would they be advised to do that now rather than wait off a few months when there's more stock online?
Yeah, of course, we can't give advice if we don't know their personal circumstances, Peter, but certainly Charles is saying if you get a good offer now, you might not get the same offer in 2 or 3 months' time.
Interesting. All right, Peter Switzer, good to chat as always. We'll talk to you soon.